All right, Blake,
Certainly
thank
is.
you. All right, gold prices, they're getting interesting as well. Prices there searching for some direction after plunging to the lowest level in 5 years on rate hike fears. Phil Flynn, normally from the CME Group, he's joining us by phone this morning, bright and early. Phil, this move in gold, everybody's watching it. Where does it go from here?
You know, that's the big question, Sandra, and I agree with you. A lot of this is fears about the Fed raising interest rates, but this drop in gold may be the reason why the Fed can't. You know, a lot of people are asking questions whether this drop in the gold market, could really, be like a cancer to the rest of the commodity complex. Because it wasn't just gold that took a hit yesterday. We were seeing industrial metals across the board under pressure with the strong dollar. And if we're getting into a situation where this drop in the gold market is signaling another round of deflation on the globe, it's going to make it very difficult for the Fed to start raising rates if these deflationary pressures are starting to rise.
So, Steve, Phil, you're going to stay with us for a second. Steve, I look at gold prices at where they are right now, $11.06 a troy ounce. My feeling is that they test $1,000 an ounce, but you're the expert. Tell me.
Yes, well, I hope I'm an expert on something, Sandra. But yes, listen, I completely agree. I think commodity deflation, it's been an entrenched force for years, and I think it's going to continue to be. I agree with Phil very much. I think that the Fed is really put in a bind by this. Although they want to talk about raising rates this year, I'm not sure that they can. When you have commodities, broad commodity indices at decade lows, and it's across the board. Sugar hit a 6-year low yesterday. Gold, if it comes out of the ground, basically, it's increasingly worth less, whether it's agricultural, metals, energy. So we are seeing broad-based deflation. I believe it's primarily because of China slowing and because of volatility in the Chinese market that is broadening throughout the globe. But that is not the backdrop under which the Fed probably gets aggressive raising rates.
And Phil, I keep talking about the U.S. dollar because everything that Steve just mentioned is denominated in the greenback. So you get that strengthening in the U.S. dollar as we anticipate that first rate hike. You get a sell-off in commodities. That's a natural sort of process that we're seeing play out there. We had a Fed president in this show yesterday say that rate hike is likely coming by the end of this year. What camp are you in as far as that first interest rate hike at this point?
Well, prior to yesterday's drop in gold, I thought the Fed was going to do it almost no matter what, because we got through some of the biggest crises. Concerns about Greece, they were sidetracked. The Chinese stock market stabilized. So I thought they had a chance to do it. But then, of course, that Sunday night drop in the commodity prices, that can change the complexion. If we don't see stabilization in the commodities, this is going to really put a monkey wrench in the global economic recovery. And if the Fed raises rates against the advice of the IMF and we start this really bad deflationary cycle that slows down the rest of the economy, it's going to make it very difficult for the market to move forward. All
right, good stuff. Phil Flynn, as gold sinks to yet more 5-year lows, commodities struggling across the board. Thank you for joining us this morning. Temperatures